Good morning. Today is Monday, November 10th, and I want to take a look at two Forex currency pairs. The first one I want to talk about is the US dollar Swiss franc. US dollar Swiss franc. The symbol is USDCHF. Okay, we've got a daily chart in the upper window and a 240-minute chart in the bottom window. All right, and obviously on the weekly and daily, or the daily and the 240, the trend has been up, right? The trend has been up for a long time on that daily, right? And on the 240, we switched up here about Halloweenish, right? A little on October 30th, we changed up. We've had a couple pullbacks, pulling back for our second pullback right in here, right into that 50 exponential moving average, right? Market contracted a little in here, pushed a little bit lower, and now we're coming up. I think this is a good buy. I think the market should start to move up from here and try to at least try to get back and try to retest these highs, at least move back 50% of that down move, that correction, that pullback that we've seen, the Fibonacci retracement that we've seen. Okay, and in the second market, okay, before I switch to that second market, let's look at the daily just real quickly. So again, we're starting to pull back within that blue action zone on a daily. But of course, on that 240, we're deeper than that. We've actually hit that 50. We're starting to bounce up from there. So let's see what we do here in the next day or so, at least off that 240-minute chart. Next one is the US dollar, Canadian dollar, and this is the one that I pointed out to last Friday. Market pulled back nicely. We've definitely gone a little further than what I would have expected, but I still think we're at an area right in here where we should start moving higher. If we don't start moving higher up through these highs, then that stop should be placed below the gray action zone. If you recall, on Friday I measured the fibs from this low down in here. Okay. The low that was put in place on October 29th up to the high right here that was put in place on the 4th of November. And we are, if you take a look at this chart, we are back to that 50% retracement of that move, roughly. Just tagged it, okay, right in here. And we're starting to consolidate. So if you haven't put on any trade thus far, then what I would do is I would wait for confirmation for the market to break up through the high of 1.1333 up to 1.1336. A penetration up through these highs a little bit would confirm that the market should in fact move higher. If you do that, then you could place that initial catastrophic stop below these lows right in here, right below it. Because if we come up and break up through these highs, a good place to place that stop would be below the lows. Because if we have a failure, if we're not able to move higher after penetrating and we move lower, we don't want it anymore. Okay? So on a daily chart, we're starting to enter into that blue action zone here, as you can see. And that is confirming with the 240-minute, right? So obviously the 240-minute has got a deeper pullback. Obviously, the smaller time frames are going to look a little bit more severe when the market pulls back. You want to try to line the smaller time frame up with the larger time frame. So in this example, again, we're using a daily chart and a 240-minute chart, and we're looking to execute the trade off of the 240-minute chart so we can get our stop, our catastrophic stops smaller. Okay. Hope that helps. And if you have not watched the 3 videos that I put out last week, I urge you to do that because they will be taken down tomorrow at about midday. Okay, about noon Eastern Standard Time, those videos will be taken down. So again, I urge you to watch those videos. Plus, you've got a nice PDF file for each of those videos. And if you've got any questions, please, by all means, don't hesitate to write a blog comment, and I'll respond back to you. Or just email me directly, and I'll get back with you, okay? Have a great day. Bye for now.